Now we will see some examples of financial statements for a state or local government or any type of government entities. As I mentioned at the very beginning that a state or local government will prepare two sets of financial statements. One is their fund financial statement and the focus is mostly current year's items, and another is the government-wide financial statement. So government-wide financial statement is just the entity's whole financial statement. And let's focus first the government-wide financial statements. And we will learn that under these government-wide financial statements, they need to prepare two statements. One is the statement of net position, and another is the statement of activities. So the statement of net position is just like a balance sheet where they will show their assets and liabilities, and the statement of activities is just like an income statement where they will show all of their revenues and expenses. But when a governmental entity will prepare this government-wide financial statement, they will actually categorize all of their activities into two classes. One is the governmental activities and another is the business type of activities. So governmental activities will cover all governmental funds. So you remember when we discussed all those funds, so they usually have different type of five types of governmental funds like general funds, special revenue funds, capital project funds, debt service funds, and permanent funds. So these type of activities basically relate to the service that the government entity provides to the public. On the other hand, business type of activities will cover mostly all enterprise funds and few internal service funds. And here, business type of activities means that government entities are charging fees or they are collecting amounts from public when they're giving services. For example, the use of the tolls from bridge or highways, or when you use any government facilities, park, golf course, you pay the service. So these are basically business type of activities. Now let's see one example. So this is the statement of net position. That means their balance sheet, and they present all of the assets and then liabilities, and definitely they don't have a section which is called net stockholders equity, but they call it actually net position. So net position is nothing just asset minus liability. Again, you will see here that the presentation is basically classified into two categories: governmental activities, which covers most of the governmental funds and most of those internal funds, and another column is business type activities. So most of the cases, those are actually enterprise funds, and you will see some internal funds. Now you will also see that some items, those are neither assets nor liabilities, but those are related to future periods. That's what we call deferred items. So they will also present those deferred outflows and inflows. So this is how they will prepare their statement of net position. So if you look at the governmental activities, so under this governmental column, 4,630 is their total asset, and they will also consider these deferred outflows, $200, and then if you subtract all of their liabilities and deferred inflows, which is 3,050 and $100, you will get their net position under the governmental activities, which is 1,068. Now, when they present these net net amount here, the net position, they will actually classify it. So one classification, they will show how much net position is in their capital assets, fixed assets. And then they will also classify the amounts, whether there is any restrictions. Those restrictions could be through some legal requirements or some external restrictions, or if they have any unrestricted funds. Now, if you look at their business type activities, you will see again they present all of their assets and deferred outflows, then liabilities and deferred inflows. And if you subtract that, you will find their net position. So again, net position will be classified into three categories: investment in capital assets, or if they have any amount, either restricted or unrestricted. So this is how they will prepare their balance sheets and they will prepare into two columns. One is under the governmental and another is the business type, and then they will have the total column. So total is nothing, just uh, here adding the numbers across these columns. Now, here, this is just the summary what we discussed. They will present all assets and liabilities and different items that Gatsby identified. Those are neither assets nor liabilities, but those are related to future periods. They will also show that, and the net position, which is basically asset minus liability, that will have different categories, how much they have in capital assets, or they have any restrictions or unrestrictions. So now let's see the statement of activities. So the statement of activities is basically an income statement. Again, when they're gonna prepare it, they will prepare it into two columns. So one is the governmental column, another is the business type column, and then they will have the total column. So now if you want to focus only on the governmental activities, which is, it's kind of a matrix type of presentation. So this is basically the governmental column, and here, this first part, what I'm pointing here, this is also the governmental column, governmental items. So they will show all of their expenses and their revenues, and this is the net revenue. They don't call it net profit or net income, but we call it net revenue. So for the governmental activities, we will see their net revenues is 3,180, whereas the expenses are 23,900. That means they have a deficit revenue or negative net revenue, which is 20,720, which makes sense because these are basically the fee services that the government are providing to public, and that's why they have these negative net revenues. Those are related to these governmental activities, and basically those type of activities are financed by taxes. So we'll see it later. Now, if you see this governmental column, you will have these items, but this section definitely you will have no information because this relates to this business type of activities, which is presenting in the next column. So now if you focus on the business type of activities, again, this column, this part is blank because they created these two columns just to show the governmental and business type, this vertical presentation, and here they are also showing it in the first part governmental and then second part business type, and these two are basically the net columns, I mean net revenue columns. So now here if you want to focus only on business type of activities, so if you see there total revenues, which is 12,760, and total expenses 10,820. So for these business type activities, their net revenue is a positive 1,950. And then they can also show the total, that means these two together, total expenses and then total revenue. Now they will show their general revenues. So these general revenue, the major sources, of course, taxes, right? The government collects tax from public and property tax or any other type of tax. And they might have some investment earnings or some other type of transfer. So now you will see that majority of these taxes or general revenues are used to finance these governmental activities. So those are, when you show this column, those are in the governmental column. So now, after showing this net revenue for the governmental activities, and when you show the general revenues, which is 21,420, and they had a deficit revenue negative 20,720. So the net change in their position under these governmental activities $700. So this is the net change. That means only under governmental activities, governmental fund related activities, revenues minus expenses, the net is 700. Now they're gonna add last year's amount from their last year's balance sheet or last year's statement of net positions, which we call like the beginning net position, which is 980, and this is how you will get these years, current years net position, which is 1680. And I'm talking only about governmental activities. That means if you go back here, look at their balance sheet under governmental activities, their net position is 1680. Now, how that happened? They had a beginning amount 980, and through this year's activity, their net change is positive 700. So those two together is 1680. Now we can do the same thing with business type activities. Again, this part, the first part is focusing on these governmental activities. Now the second part of these statement of activities is for business type, and we already discussed they have higher revenues than their expenses, so their net amount is a positive, net revenue is a positive item 1940. And then they usually business type of activities are basically financed through those charges and fees that the government entity collects from the public. So you will see that very little spends on general revenues. Rather, they transfer a little bit of fund from business type to governmental activities. So after doing that, you will see that the net change in business type of activities is 1410, and if you add last year's net position amount, which is we call beginning net position 790, you will find for business type of activities net position at the end of this year is 2200, which will match with your balance sheet's net position. Now they will do a total column, which is nothing. They will add all the numbers across the columns, and this is how you will find the net changes in total net position after adding both governmental and business type, which is 2110, and then beginning amount was 1770, and then at the end their net position is 3880. So basically this is actually the net equity part, the total government as a whole. And of course when they prepare it, either their net position or statement of activities, that means balance sheet type or income statement type of statements, they will categorize everything into two categories: governmental and business type. So this is just the summary statement of activities, how they're gonna prepare it. Remember, these two statements is for government wide financial statements. Now we will see an example, few other statements. Those are actually related to fund financial statement. So for fund financial statement, they will prepare a balance sheet and they will prepare another income statement type of statement, which include revenues, expenditures, or any other changes in fund balances. And when they will prepare it, they will actually categorize this. When they will prepare this statement of revenues, expenditures, and they will show it into three categories: revenues, expenditures, and other financing sources. And remember, fund financial statement basically focuses on your current period's items. So basically here you will see that these statements are different, completely different than government-wide financial statements. So here you will see the internal service funds are grouped with the funds they benefit, and here you will see that government-wide is kind of as a whole, but those are fund specific. And also you will see the timing of recognition is a little bit different, because sometimes the fund financial statement basically focuses on your net changes when your resources reduced or your resources increased. On the other hand, government wide is a little bit different, and that is why you will see the amount actually differs. And here they need to prepare a statement of reconciliations so that they can show why these fund financial and fund statements or government wide statement amounts are different. So now here we will see one example, and this example basically is showing only two fund financial statements, and that they actually, this example actually group the all other fund financial statements here. So they will prepare these balance sheets. Again, the idea is the same. assets and liabilities, but at the end, the net amount, they actually call it fund balances. And those are related to their different type of specific funds. So if you see here, they have this general fund column, and under this general fund column, they actually shows all their assets and liabilities. Again, they can have some deferred items, deferred inflows or outflows, and then here they will also show the net portions, which they call actually fund balances. It's not the net position or net worth or net equity, they call it fund balances. And they basically classify those fund balances into five categories. These are non-separable, restricted, committed, assigned, and unassigned. So here in this example, show two major funds, probably the example the textbook used for this government, and then they also grouped all other funds as other governmental funds, and they have total governmental funds. So their major funds are general funds and library program funds, and they have all other, and then they will show the grand total column. Now I would like to focus on this fund balance part. So fund balances is the net part, right? Assets minus liabilities. But now remember, these are kind of the balances of their funds that they have it. So now here, if you would like to focus on these fund balance categories, you will see here different names, non-separable. Actually, if you read the names carefully, you will get some idea what does this mean. For example, non-separable, does this general fund, they mean that this is the amount of the fund that they that cannot be spent actually. Those funds actually they these restrictions, there are two reasons for some assets such as supplies or prepaid expenses are simply not in a separable form, right? So that can cover those type of items. Second, financial resources are occasionally received that cannot be spent because of some externally imposed limitations. So these funds cannot be spent. That's why they call it non-separable, non-spendable. Now the second category is the restricted amount. So for this restricted amount, it is actually the funds, that amount is held by the government that must be spent in a manner that has been designated by an external party. That means the restriction is um, is kind of imposed by the external party. Now third category is the committed. So for this committed fund, here they have some amount of funds. Those can be used for a particular purpose, but those restrictions are not imposed by an outside party. Rather, those commitments or those restrictions, in one sense, you can say, those are made by the highest level of decision-making authority within the government. So one is non-spendable, that you usually cannot spend. One is restricted by the external parties. One is restricted, or they use the term committed, by internal authorities within the government. On the other hand, you will see two other types, which are assigned and unassigned. So for assigned means those are kind of, those funds are held for specific purposes, and those for those specific purpose they keep aside those funds, and those, not necessarily those will be imposed by higher level of decision making authorities in the government, but those are for specific purposes. On the other hand, the last classification is the unassigned part. So this unassigned part is kind of the free resource, and that has no internal or external restrictions, and that can be used for any purpose. So this is how they will present their balance sheet. They will show it major fund wise columns and all total funds, and then if you add all across the columns, they will find the total governmental funds. Now we will see their statement of revenues, expenditures, and then net changes. So again, they will show it according to their uh, funds, general fund and library fund, this example, and they will cluster all other funds and they will list all of their revenues and then expenditures, and then they will show their net changes. Now, if you look at the numbers here, let's say one example for this general fund column, their total revenues 17,800, total expenditure is 16,300. Then they will show these revenues minus expenses. This is kind of the excess of their revenues over expenditure, which is 1,500. And then they may have other finance sources. For example, if they have any bond, they are getting anything or any type of transfer in and out, and this is how they will show their net change. Again, for the library program column, you will see the same thing. They have their regular revenues related to this fund or program, then their expenditures, and they will have these revenues minus expenses, whatever the excess of revenues over their expense, and if they have any other financing from other sources, and they will show their net changes. So remember, please, this is focusing only on the current years. So again, here for fund financial statement, here they definitely will not have any stockholder equity section on their balance sheet. Rather, they call it fund balance, and when they prepare the fund balance, they actually categorize it into these 5 categories. Now we will focus on a little bit of budget. So we know that budget is really very important, not only for a public or a for-profit company, but also for government entities, because this basically budget expresses whatever will be your public policy, how much money you have for child care or for environment purposes or for educational purposes. So these actually also expressed as a financial intent. That means how much money you have for your upcoming fiscal years. Also, you can call this budget is actually a financial plan for the government. It also helps to the government to control, because sometimes this budget will set you the limit, how much maximum you can spend, or if you have any deviation, what would be your next step to achieve your target, right? Or at the end of the year, or when a financial year just passed, you can match whatever you spent, whatever you did with your budgeted numbers. That will also help you to measure or evaluate your performance, right? So overall, this budget plays really an important role, and it indicates whether the government actually has like sufficient amount of revenues or funds to cover all of their expenditures. So now we will focus on this budget part and we'll see few journal entries. So let's see this example. A town enacts a motor excise tax to promote tourism and conventions, and for 2015 the tax is expected to generate 490,000 special revenues, and the city council also authorizes these expenditures for 20 total out of these expected revenues, tax revenues, and they want to spend it this 420, and they have different categories: 200 for thousands for salaries, 30 for utilities, 110 for supplies, and 80 for advertising. So when they will record it, they will prepare this budgetary entry. Remember, this is for fund financial statement. So here they will record it estimated revenues, this which is their tax levy, they will debit it, and then they will show credit all of their appropriations. That means they are expecting this much they will receive, and then later the credit items they are showing the how this is how they are sourcing the amount and how they are spending these amounts: salaries, utilities, advertising, and then they are expecting to have 70,000 as a balance, which they will also show as budgetary fund balance credit. So total expectation, so they will call it estimated revenues. These are not real actual revenue, and this is how in one sense you can say fund financial statement differs from government-wide or accrual, pure accrual, or for-profit financial statements. So they will debit this for 90 and they will show all these expected future for 20, and the difference they call it budgetary fund balance 70,000. So now here we will see another item which we call encumbrance.